thought our stock of the day is one that we looked at a couple of weeks ago right here on this panel with these two blokes. It is a colorectal cancer diagnostic company, Rhythm Biosciences. Since Mathan and Gaurav reviewed it on the call, I think it was 2 weeks ago from memory, it's had a massive run. Have a look at that. In the past month, the stock has hit a new 52-week high. After we uncovered it, thanks to you, our viewers, because you suggested it to us, both the guys had never heard of it, had a look at it and were stunned what they saw. We then got Chief Executive Glenn Gilbert on ausbiz last week to discuss the company's low-cost blood test technology and the forecasted addressable market. This is what he had to say.
We will be the world first low-cost mass market blood test for bowel cancer. We detect protein biomarkers that go up and down in the presence of cancer. CSIRO spent over 13 years determining which biomarkers are the ones that perform that certain way, and Rhythm over the last circa 4 years have turned that into a consistent, reproducible and very accurate blood test. We see this offering great benefit to patients, to GPs, to health insurers who pay for colonoscopies that may not be required at that time, and of course governments. Governments are rolling out these colorectal cancer bowel screening programs, spending hundreds of millions of dollars, and we think we can increase that compliance rate considerably. Not many people realise bowel cancer is the #1 cause of cancer-related deaths for those 25 to 35 years old. So we think, along with the uncomplicated nature of our test, that 38 billion is, whilst a large number, could be on the conservative side.
Really interesting business, isn't it? 13 years it took the CSIRO to identify those markers. The biggest killer of 25 to 35-year-olds, colorectal cancer, and this is an easy blood test to get it done. Gaurav, it was an eye-opener for us at the time, but the share price has gone through the roof. Yeah. Have we missed it?
No,
have you been buying?
It wasn't me. I wish I had bought this one, but I didn't. It doesn't really fit into the bucket of stocks that we would buy at Intelligent Investor, either for the publication or for the funds. But I remember looking at the stock at the time, and I think the comments I made were that it solves a legitimate problem, does it better than the legacy processes for that problem. Again, large addressable market, but also crucially, the people it had attracted were top-notch, well-credentialed, serious people with big reputations, and finely tuned specialties. And those are the sort of processes you need to go through when you're looking at concept stocks like this. You obviously, I think it's silly just to look at the financial metrics. Obviously, it's silly just to look at financial metrics and come to a conclusion from that, because the information isn't in there. But you can see that they've worked on something that's super important. It's got a good heritage. Any technology that's commercialized from CSIRO, you have to take it seriously, because the track record of those technologies is so good.
Huge.
And you combine that with credentialed management, and I think that's probably good enough. Look, I wouldn't be piling in, but that's good enough. And I called it intelligent speculation at the time, and I think that's what it is now. The market cap is still fairly modest for the potential of the business. And the outcome from here, as it was a fortnight ago, remains binary. If it works, you're looking at a huge gain even from these levels. And if it doesn't work, they're likely to have to fold the technology and look for something else to do. So you'll see a big share price decline, which is why it remains speculation. But I suggest that it maintains intelligent speculation. And I would still, if you're interested in a speculative position for a part of your portfolio, I still think this makes a lot of sense.
Mathan?
Yeah, look, I mean, it's hard to disagree. I mean, it's one of those ones where you look at and where they are through the cycle for the product. They're basically going into the final trial. Basically, they're going to start that process. That's going to finish next year. So middle of next year, you're going to be going into that submission process. By then, whether you're there or not.
Yes.
So we're really at the back end of it. I mean, this is big things, right? This is huge addressable market, and that's always a worry for me when people start to show blue sky and you get the steroid run. Look, the short term, what worries me is that's probably 6 months away. Looking at the cash holdings, they're probably 6 months is all they've got. So, brokers will be circling this when the share price runs up.
They'd be crazy not to raise.
Exactly. So you've got the macro, you've got the addressable market. This is just like the greatest bingo word out there. If you go
I know, you're
addressable
right,
market,
isn't it? Yeah.
it usually gets, I take a
Yeah.
gun and start hitting me myself on the head.
That's right.
But it is one of those things where they're so close to the end game. I mean, these things take 10 years.
Yeah.
So if you're not there burning money for 10 years, well, you're the one paying for them to burn it. So these guys have done that. They're in the right area. They're getting close to what it is. It is a intelligent punt. You are taking a punt, but it's worth it, I think. So market cap is still low. My gut feel is because they will be raising in the next 6 months, if you already have a position, I wouldn't be jumping in. I'll wait for the raising and take advantage of it.
Right.
But it's worth it. I think the addressable market and where they are in the cycle, well, you're 6 months away. It's like buying a mining stock that's building the mine and you're 3 or 6 months away from production. That's the time to look at it because they've already done the messes.
Yeah.
So you're right at the end of it. So this is one of those.
So wait for the raise.
I think you would want to wait for the raise. If you don't have a position, I would get some because you probably will get a better shot at getting the raise because my guess is it'll be heavily pitched on, so you wouldn't get much anyway.
Yeah.
Right.
So if you're a shareholder, then you're going to get some. So if you don't have any, get some so that you get a shot at it. If you have it, then I'll wait for the raising.
I also like that they've already started building out their US organization.
Yeah.
And that's really important because with any new technology like this, it's really the Americans pay the highest prices for tests and for drugs and for procedures. And if you are a provider of any of those new technologies, you really do need to be in the American market to pay for all your R&D. So the fact that they're building out already their American presence is important. It's a sign of confidence, but it's a sign of also sensible organization as well. So it's something you want to see, and they're doing it. So that's
the thing to be aware of in these things is, and I've punted enough of these stocks to know, is that when you're this late to the cycle, and I've lost enough money to know, when you're this late to the cycle, one of the big farmers may do one of those joint venture plays where they take the risk when you're this close, and they take a cut of it. Now, that's what can derail you if you're waiting for the raising. If someone comes in and funds the last trial and funds the last bid, then you might not get the raising.
Right.
That's what I say. You want to have a position.
Yep.
And if they're raised, you get the priority raising. If they don't raise, well, you already got a position. You can double up. If you think if there's a partner comes on, you double up because then they're funded and you've got no risk.